Good afternoon, everyone. Hey, Joe.
Good afternoon.
All right, we've got the audio up here, so when the call starts in 12 minutes, we'll play the earnings call, which, based on the latest ones, probably will be a quick one, unfortunately. But yeah, we'll start that up. Let me take a minute here to get our disclaimer out of the way and talk for a minute or so about the quarter before we hear the con man's voice and go through his bullshit. Okay, so one second. Wook Capital Management, Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from your professional investment advisor and to make independent investigations before acting on the information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual. So with that mouthful out of the way, we got a mouthful of BS from the still Chief Executive Officer of PLBY Group, Ben Cohn, this afternoon. They reported earnings. Well, if you want to call reporting another loss earnings, Cohn put together a multi-paragraph statement asserting why the operation continues to deteriorate and why it isn't his fault, why he shouldn't be fired. They are, as we know, they consummated the sale of Lovers, their sex shop chain, to Flint Management Group. That sale completed last week. So, the balance sheets and so it was reported in discontinued operations, and obviously the receipt of the cash for the sale of the business happened after the quarter end. So net of that transaction, their pro forma cash, restricted cash and equivalents is around 35 million. But unfortunately, they continue to burn meaningful cash, and there is really no indication that I can see that that's going to change anytime soon. Unfortunately, they continue to sell burn the furniture, if you will, perhaps literally and figuratively, as they've now sold multiple operations year to date, multiple operating businesses, and they're now embarking on this multi-part, or rather two separate auction sales, the second of which in March 24 will literally include them selling the furniture from the Playboy mansion and other memorabilia. So there still is a complete lack of any board oversight, allowing this madman to continue to triple, quadruple, sextuple down on a failed strategy that he's overseen for years now. So it's obvious to me after this latest disgusting result that Ben Cohn must immediately be fired. I'll be calling for that in a letter to the board in short order. The company must immediately put itself up for sale, wholesale. They need to sell everything. They need to stop doing these piecemeal sales of bits and pieces of the business while they burn more and more money and compensate Cohn and his cronies. So that's where we're at, unfortunately. They've done the wrong thing time and time again. It's hard to think they'll do the right thing here. I will make that call for him to resign. That is the right thing to do. He won't. But if he refuses to resign, I'll call on the board to fire him. And if that won't happen, I do still anticipate opposing his seat if he still holds it on the board in the coming annual general meeting, which will be in a few months from now. So we'll see how the next few months play out. And the company did note a few things that they, quote, are not currently convinced about selling 100% of Honey Birdette in today's market. Okay, well, you overpaid and now the market is deteriorated. They note, quote, we are looking at ways to maximize the potential growth of Honey Birdette without burdening our balance sheet. Well, as I just said, they need to sell everything. And unfortunately, there's no confidence by anyone in the market that Ben Cohn can lead any of these operating businesses to success. I've spoken to employees, shareholders, creditors of the company, and the message is consistent that Cohn is absolutely the wrong man for the job. But what that means to me is that they may seek to sell a chunk of Honey Birdette in a joint venture type arrangement, some sort of creative financing scheme. I'm sure that's the only thing that Ben Cohn's capable of, is concocting creative financing schemes. So we've got that on the Honey Birdette front. Sales were down 19% year over year. They ran fewer days of promotions, so gross profit margins were up 3%. So clearly still a deterioration in gross margin dollars. With regard to China, we know that they had lost their top licensee, which Ben Cohn had personally overseen the lease, that agreement with, in 2019. So again, his own failures coming home to roost that he continues to avoid any ownership of. But they note that they, quote, found extensive contractual violations related to that licensee's sub-licensing agreements that deprived them of significant additional royalties. So they took another multi-million-dollar non-cash impairment by severing this relationship with the licensee. They did note that they've received an unsolicited offer to buy their China trademarks from a Chinese private equity firm and are in the process of negotiating terms. The issue, as I see it, continues to be that they do have a lot of assets that have real value, but if the path is that Cohn will continue to pile those assets as he sells them off into his failed creator platform, like he has made clear is his intent from this latest report, then it will all be worth nothing. And whatever buyers out of a Chapter 11 are able to pick the parts for is what they'll get. So really, in my view, the best interest of all shareholders is a complete sale of everything as soon as possible, coupled with the immediate firing of Cohn. They noted that on the licensing side, they saw double-digit declines in wholesale sales from their two largest U.S. apparel licensees. I note that they have the sensors, but regardless, weak across the board, really. The costs that they claim to be cutting, they're just not there. They're not substantial enough, and now they're saying that they are renaming the creator platform once again. They're renaming it the Playboy Club. I have no idea, after reading the paragraph multiple times, what it is that Cohn thinks he's going to do with this. It's just clear. I've seen the user data from Centerfold. The platform has stagnated. It's clear it won't achieve operating profitability under his leadership and is, in fact, a cash consumer. And it's regrettable that he is making it seem that they are going to invest incremental capital into this failed product. Yet another one of his many failures. So that's kind of where it stands. They did report in the 10Q, which did come out, that management made an initial assessment of their going concern. They believe that with their focus on improving results of operations and the timing and magnitude of capital expenditures and capital raising transactions during the balance of fiscal year 23 and 24, that they believe these plans are probable of being effectively implemented and will mitigate the negative impacts. As such, they believe that they will be able to meet their obligations as they come due under their amended and restated credit agreement for at least 1 year following today's financial statement, or the statements that came out on 10Q today. So yeah, we're still have yet to see anyone file a 13D or to make a public offer for any of the assets. I know from my conversations, my extensive, ongoing, incessant conversations with any and all shareholders of the company, that multiple entities have spoken to the company about selling any or all of its assets. And unfortunately, the company has been, from what I've come to understand, there's just such a deep disconnect between what they think they can sell things for and where the market is pricing this enterprise at. So really the only path forward is to remove the impediment, which is obviously Ben Cohen. So that's enough of my diatribe. Clearly, I'll get that letter out in the coming days here to the board, and we'll see where things progress from here regarding any more formal activism. As I noted, my current intention is to oppose Cohen's board seat, as he and Rizvi are both up for re-election, and I believe both he and Rizvi should have a tougher fight than they would like come the springtime. So we'll see if they get started on time with their Q&A session. But it's 4:59 here Eastern, so we'll get this broadcast underway once the live earnings stream concludes. If anyone wants to come up and chime in or ask questions, we'll keep the call open for a half hour or so afterwards, at which point we'll conclude this quarterly presentation.
Good afternoon, everyone, and welcome to PLBY Group's third quarter 2023 earnings conference call. Hosting today's call are Ben Cohen, Chief Executive Officer, and Mark Crossman, Chief Financial Officer and Chief Operating Officer. The company will be hosting a question and answer session today. To join the queue to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. And for participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. While we wait for the queue to fill, I would like to hand the call over to Ashley DeSimone of ICR.
Thank you, operator. Good afternoon. I'd like to remind everyone that the information discussed today is qualified in its entirety by the Form 8K and Form 10Q filings made today by PLBY Group, which may be accessed on the SEC's website and PLBY Group's website. Today's call is also being webcast, and a replay will be posted to PLBY Group's Investor Relations website. Please note that statements made during this call, including financial projections or other statements that are not historical in nature, may constitute forward-looking statements. Such statements are made on the basis of PLBY Group's views and assumptions regarding future events and business performance at the time they're made, and we do not undertake any obligation to update these statements. Forward-looking statements are subject to risks, which could cause PLBY Group's actual results to differ from its historical results and forecasts, including those risks set forth in PLBY Group's filings with the SEC, and you should refer to and carefully consider those for more information. This cautionary statement applies to all forward-looking statements made during this call. Do not place undue reliance on any forward-looking statements. During this call, PLBY Group may refer to non-GAAP financial measures. Such non-GAAP measures are not prepared in accordance with generally accepted accounting principles. A reconciliation of non-GAAP financial measures to the most directly comparable GAAP measures is available in the earnings release PLBY Group filed with its Form 8K today and in its Form 10Q filed. With that, I will hand the call back over to operator to begin the Q&A session. Operator?
Thank you. And again, at this time, we will be conducting the question and answer session. As a reminder, if you'd like to ask a question, please press star 1 on your telephone keypad. And our first question comes from the line of Jason Tilchen with Canaccord Genuity. Please proceed with your question.
Great. Good afternoon, and thanks for taking the question. First off, I'm curious, you mentioned in the press release that you're not 100% convinced about selling Honey Birdette. I'm just curious, what are some of the different factors you're weighing as you think about that asset and how it fits into your broader platform going forward? maybe what are some of the options beyond continuing as is that you're currently looking at the moment?
Thanks, Jason. Good afternoon. It's Ben. I think right now we are making the operational improvements we've talked about in previous calls to Honey Birdette. As we said today, we are instituting a 10% price increase that will start in the fourth quarter, and it will take us, really until probably the second quarter of next year for all products. But we have not raised prices in the last 2 years, and yet we've faced rising inflation with wages, product costs, and shipping costs. We've also changed our free shipping as well as our expedited shipping policies, and we have other cost measures that we're taking. Given the macro environment right now from M&A, especially on the retail side, we don't think it's the right time to maximize shareholder value by selling that. However, we are looking at strategic alternatives and are pursuing partnerships where we might be able to bring in a partner to help us grow the business without using cash from our balance sheet.
Great, that's really helpful. And then just to follow up, not on Honey Birdette, but on the licensing business, you mentioned in the prepared remarks in the press release about potentially having a Chinese private equity firm making an offer for some of the Chinese trademarks. I'm just curious if you could expand a little bit about how that would impact the shape or trajectory of the licensing business in that market going forward.
Sure. There's not much I can say at this point. What I can say, and we talked about this in the press release as well, is that over the past few months we've done extensive audits of our old partners, both from a legal and a financial perspective. We saw multiple violations and incurable violations of those agreements, as well as we've talked about previously. Our partners have not been paying us, so we have decided to terminate a number of them. We have strong interest from some of their subs, as well as new partners that might be interested in licensing the brand. And at the same time, we received an unsolicited offer to buy our IP. We are still evaluating that deal and whether that deal makes sense for us or not, given the business, the valuation, the geopolitical situation, et cetera. In its current format, we would be selling all of our China business, and we would not have a China business moving forward. But in return, we would receive a significant amount of cash. But again, it's early in that, and we're still evaluating it from a company perspective.
Great, that's really helpful. And just one last one. I was wondering if you could perhaps share some of an update on some of the key metrics that you've been discussing in regards to the Creator platform. I know you shared a lot about plans to sort of change that rebranding and also introduce membership tier. But I'm just curious, what are some of the underlying trends that you're seeing over recent months?
Yeah, we're still very happy with where the Creator platform is. Moving forward, we're not going to be talking about GMV because that is not the metric by which we think we should be judged. What we're going to be talking about is digital revenue. I think we are not, to be clear, we are not trying to compete with OnlyFans. We don't believe in being Costco at Playboy. I think we view ourselves more as a Neiman Marcus than a Costco, and so we think we have a way with the Playboy Club, which really, from the people we've talked to, resonates with people. It makes sense. This is the place to interact with creators, but also the addition of membership. We have ways for creators to make more money with Playboy than any other platform. We're building out an affiliate program where they can sell memberships and get paid. They can participate in live events. There's a really unique value proposition for membership. And so for us, it's much more about revenue. We also believe with the creator tiering that we've rolled out that, OnlyFans had set the market at 80-20. We don't think 80-20 for a creator platform split is necessarily relevant, nor should that be where we are moving forward. And so, sorry not to answer the question directly, but we're going to be focusing on digital revenue moving forward as we bring our whole entire digital ecosystem together into one offering.
What a fucking clown.
That's very helpful. Thanks a lot.
Yeah.
And our next question comes from the line of Greg Pendy with Chardan. Please proceed with your question.
Hey guys, thanks for taking my question. Just flipping back over to Honey Birdette, can you just kind of let us know? I mean, what are you seeing in terms of the ability to raise prices? You said you're going to be doing it gradually over the next 6 months. I mean, where do you think competitively the retail environment in that space is positioned?
Thanks, Greg. Yeah, look, I think October is a great example, and we talked about this, but in October of 23 versus October of 22, which is a month that we had no sales in either year, we were up 16% year over year. And so with the right product, we are easily seeing the demand for that. We've also made changes already to expedited shipping, to free shipping thresholds. We have not seen any impact to consumer demand for the product. And so we believe that we have room to raise prices. Obviously, labor and other costs have gone up. And when you look at the competitive landscape, we've seen others raise prices. We have not. And so that is something that we will start implementing here in the fourth quarter. And just given how we tag items based on the factories, it will take us until the second quarter to have that across our full product suite.
Right. And then just one more on Honey Birdette. Can you just remind us what the store base sits at right now, where it was last year, and if there are any plans for new stores?
Yeah, so Greg, it's Mark. Right now, the store base has got 48 in Australia. We've got 12 in the U.S. And we have 3 in the U.K. And since then, we had opened, I think, a year ago, 3 new stores. I'll get the exact number for you, but I think that was in the U.S.
Yeah, Greg, I think we would like to open new stores. I think that we are committed to becoming a capital light to moving to that capital light model we talked about. We don't think that's the best use of shareholder capital on our balance sheet, just given our limited resources and the debt that we have. But we are exploring, as we said, strategic alternatives to potentially bring in a partner to help us expand that business. It's just not the right time for us to sell 100% of it after consulting with our advisors based on the macro environment.
Makes sense. Okay, thanks a lot.
And we have reached the end of the question and answer session. Therefore, I'll turn the call back over to management for closing remarks.
We appreciate everyone listening, and we look forward to talking to you on our next call to discuss full year 2023 results. Thank you.
This concludes today's conference, and you may disconnect your lines at this time. Thank you for your participation.
Obviously, they've thrown in the towel. Quite disappointing. We'll need to be working on my letter that'll be going out to the board, calling his immediate firing. So, yeah, if anyone wants to ask any questions, chime in with any thoughts. Again, just to be clear, we're not part of any shareholder group, and I personally disclaim any beneficial ownership beyond my own personal stake. Me as an individual, Rod, my beneficial ownership has no overlap with Wook Capital Management's, but neither Wook nor myself have formed any group with any of the shareholders that we are in steady contact with. So I just want to make sure that's abundantly clear. I have no interest in stepping on anyone's toes with regard to 13D or 13G grouping rules. So, yeah, I mean, in a nutshell, they don't think it's the right time to sell Honey Birdette, even though they would like to open more stores. Ben Cohn, of course, being the capital destroyer that he is, finds himself overburdened with debt and incapable of funding those store openings. So it will be interesting to monitor what ends up happening with Honey Birdette, business that they purchased for more than the entire firm's current enterprise value. So really not much detail. We got Mr. Cohn's written statements that it looked like he sat on the toilet and marked up together. That was very much lots of gibberish and blaming others than himself, which is par for the course. one glimmer of hope, I guess, is his call out, which is valid, that October Honey Birdette sales were up 16% year over year, which there were no sales in 2022 October. So, considering that a comparable, more comparable than, them not running the business um, with as many sale days. But he is right. It's a very bad environment for retail. Uh, and while his advisors may have, asserted now is not the right time, it sounds more like I am hoping that we can stay solvent for long enough to sell this for a better price, rather than them having any sort of holistic vision. So we'll see. But I have a few people requesting to speak, so I'll bring them up. And it's 5:15. Obviously, the call is over already. We'll go for as long as there's a good discussion to be had, or 6 o'clock, whichever comes sooner. So, McMoney, you came up first. Satoshi, before you chime in, just going to let McMoney, if you're there, unmute yourself and go right ahead.
Yeah, thanks for having me up. I have a few questions. I think I'll begin with the most pertinent. Over the last 20 years, obviously, there's been digital transformation in every respect in terms of their business model, but they just haven't been adaptable. I mean, that's pretty obvious. Very late in making changes. What do you think the biggest mistakes were over the last couple of decades? And is there, frankly, any way out of this? And then the second question would be, why aren't they an acquisition target by a management team that does have a vision for the future?
So to the first question, I mean, it's a very different business today than it was 15 plus years ago. There hasn't been the print business whatsoever now for over 3.5 years. Going back 15 plus, I think you did face what you noted. They never, even though Playboy.com was one of the highest trafficked websites in the 90s, .com sites, they were never able to successfully really bridge that gap from print media to digital media. And that's lingered through from old, Hugh Hefner era ownership and management through to now, since over a decade now, the Suhail Rizvi / Ben Cohn ownership, and really now Ben Cohn management for 6+ years. It's just been floundering from idea to idea, half-baked ideas that he's just a money guy. He's just a PE guy who has no clue how to run any business, let alone trying to buy multiple businesses and create some sort of synergies with them. But I mean, to your last question of, yeah, I would think this is an incredible steal. Somebody will own this brand, right? The brand isn't going to dissipate because this business ends up selling or entering a restructuring or whatever. I mean, someone will own one of the most recognizable brands on the planet for a pretty good price, I think. We believe, we laid out an argument, we think it's worth at minimum hundreds of millions. Clearly the market doesn't think so, but I do think that there are many interested parties in many of their assets. The issue is that you have the wrong people that are the decision makers, and with the entrenched position of 29.9% from the chairman's side of things, I have no idea what he's doing. He's just completely absent at the wheel, letting his old MD run the show. With any other leader, any other chairman, I would think the CEO would have been fired some point earlier in 2022. So who knows what comes next?
Yeah, I was thinking about parallels in terms of distribution or production of content. And I was trying to kind of think about what happened to Blockbuster Video. They were very slow to adapt. At one point, they could have bought Netflix. But I think this is a much more challenging situation because you have essentially an infinite number of competitors as everything has become commoditized. And there's so much free content out there that you just can't put the genie back in the bottle. This was a societal shift, a secular societal shift not so much just innovation and business model pivots that needed to take place. And of course, you had a founder who was obviously quite advanced in age and died in 2017, even though he wasn't involved in the day-to-day operations or even the strategic direction. Regardless, his specter was hanging over the company. And his children got involved, and it's basically a family business for a while. So it just took too long for them to have, and they still don't have a management team that has a vision for the future. So I agree the logo and the brand itself, quite valuable, can be leveraged in many different ways, but finding that magic formula is going to be much more difficult than a number of examples that I've thought of, including what I mentioned, Blockbuster, Netflix.
Yep.
So do you see a way out?
I can't really say too much more about prospective parties, but I mean, it's clear and obvious that people see value in the brand, and it's just been poorly managed. I mean, look, OnlyFans is not a brand, yet that platform's been wildly successful. Let me be careful with what I say, but we could spend all afternoon talking about how poorly this asset's been managed. I think that what we've tried to do is to note the extraordinary disconnect between the notion of brand value and brand equity and kind of what it is currently implicitly being valued at, which, depending, I guess, on how you slice and dice up the EV of what they still own, it tells me the market's saying that Playboy is no more than $100 or so million, which seems wrong, but with how it's been managed, I mean, who's to say it couldn't be worth even less than that?
Yeah, I mean, I'm thinking about the two of us just having a creative discussion here, brainstorming. We can think of a way out. For example, you mentioned OnlyFans. If they were to combine OnlyFans, Playboy, Penthouse, and Hustler as brands, there may be something to work with there, right? Because OnlyFans obviously has a business model that's working at the moment. So if you combine it with the brand of Playboy, perhaps you can get even more reach. And I think OnlyFans would actually be interested in something that would give it a little bit more gravitas, if you know what I'm talking about. So
absolutely, but the issue is the disconnect in what Ben thinks this is worth and what Leo would be willing to pay.
There you go. So it seems like it's a lot of egos involved. It's a lot of delusional, frankly, projections, and eventually.
Bingo. That's it. You have a completely delusional CEO who has no oversight from an absent chairman.
Right. So I guess the market is going to continue to punish this. And that's fortunately how capitalism works, that if it persists long enough, the value will just erode, and eventually they won't have a decision to make. It'll be made for them.
Agreed. They note that they anticipate the second auction in March 2024, and quite frankly, they could find themselves by the second quarter of next year that they will not be, they'll no longer be meeting the terms of the amended and restated term loan by the second quarter. So depends on what they sell, what they can get for it, how much cost they can truly take out beyond what they've taken out. But sadly, if there's no change in the status quo, I do think that it probably will devolve into a Chapter 11 at this point with Cohen at the helm.
What is the current market cap? Do you have that in front of you by any chance? I can look it up.
It's 50 million.
I see that as well. And right now it's at 68 cents a share. So, I mean, it could very easily go much lower. At what point would it be delisted? Do you know?
They got notified about that a few days ago. I can tell you what they said in their response. I can find that. But yeah, they've already been notified about about meeting the listing rules, so they have, I don't know, a few months to remedy that in some manner.
Okay, so the clock's already ticking. Was there anything positive from I didn't listen to the earnings call, but is there anything positive that you gleaned from it at all?
Well, look, as I noted, there's clearly a lot of interested buyers. The fact that you had an unsolicited offer for the entirety of their China business from a Chinese PE firm, and they called it out in the PR. They simply noted in the call that they're evaluating the deal. They clarified in its current format, it would be selling the entirety of that business and it would be a cash offer, but that they're early in that evaluation process. So, I think they need to be running an outright sale process for everything. This should have happened months ago. They should already be pursuing this. But they have different bits and pieces of businesses that there are people interested in. So this is just them getting over their egos, I think.
And what is the valuation for these offers?
I have no idea. They're not public.
So I'm on the website right now, and for $8 a month for 1 month membership.
Oh, you're asking about their
Oh
products?
no.
I thought you were asking about.
No, I'm asking for the company.
M&A
I'm
offers.
sorry, I didn't segue in a very efficient way. So yes, that's a whole other discussion as far as the value, the market cap of the entire company. But as far as the product, I'm on the website right now, and I'm looking at their membership plans for subscription. They have a 24-month, a 12-month, and a 1 month membership. The 1 month membership is $8. The 12-month is $5 a month for $60 a year, and then the 24-month you pay $100 for 2 years. So it's the same as the 12-month. And for that price, you get access.
What is this?
Pardon?
What is
This
this?
is on the iPlayboy.com website. But I got their.
Okay, that's not relevant. That's their legacy. That's their legacy. Like that and their Playboy TV product are their legacy digital media products, which is what Cohn is talking about combining, I guess, into this Playboy Club notion. But I mean, that product is a couple $1 million in annual revenue. It's immaterial.
Yeah, I agree. I think they give access to the entire back catalog going back to the beginning for $8. So it's really become a tenuous situation as far as from a customer point of view. I mean, I could just sign up for 1 month, view all the issues, and then just cancel. I mean, there's really no need for me to have a 2-year subscription. So, and you said it generates $2 million in revenue. Yeah, that's not going to move the needle.
That's part of their digital subscriptions and content, which the bulk of that is from those, I believe, those and the Playboy TV subs, which that the run rate on that is something like we're talking less than 15 to 20% of total revenue from this, I guess, net of the Lovers disposal.
What was their revenue this quarter?
33.3.
And is that gross?
That's total revenue from continuing operations.
I see. Okay. Yeah.
Yeah, there's too many moving parts to look at one thing here, unfortunately. We laid out our report at PLBYDD.com and tried to value the assets, which equity market has told us we were wrong about. So if you want to check that out, feel free. It might help you if you're looking to kind of see what some of the different pieces might be worth.
I will. Thank you for mentioning that. Does the DD stand for due diligence?
It does.
And what, may I ask, is your interest in this? I mean, are you looking at this as a potential acquisition?
We are one of the largest shareholders, and we have been for some time.
Oh, really? I wasn't aware of that. Okay. How many years?
Multiple years. I mean, they only brought this back public in early 21. I've personally been invested since February of 21.
Oh, wow. So I'm looking at the 5-year chart because I'm a trader. And so going back to, let's say, November of 2021, we're looking at around $32 a share. The high in May of 2021 was $63 a share. So we went from $63 to 68 cents. And during that time, I'm sure you reached out many times and stated the issues that you have. And it sounds like
I've been calling on Cohn's resignation publicly since August of 2022.
yeah. And what about other shareholders that you've spoken with? Is it unanimous? I mean, I would assume it is.
Everyone wants Cohn gone. The issue is Rizvi. Rizvi has 30% of the company. He has an investor rights agreement that make it very difficult for minority shareholders to effectuate the necessary changes. And Cohn is his former MD at points in past. So there's clearly some personal loyalty and just complete not caring, frankly, it seems.
So here's how I see that situation.
And no one really cares about the stock.
Yeah, I'm thinking that they're just collecting a salary and they want to milk that salary as long as possible, and they don't really care about the share price. Is that what's going on?
That's a narrative.
Because I would think from a financial incentive point of view, it would be much better for them to have the share price increase in value, right? I mean, that's common sense. But if they see this as a no-win situation, like when Sears was acquired and it was, basically gutted, at that point, you're just trying to get as much capital and cash for yourself personally from a management point of view as possible, which could be considered unethical, obviously. But that's the only possible motivation I can see for them to not engage you and listen to your feedback and implement it. I mean, because it sounds like obviously you have a much better understanding than they do, and why wouldn't they? So that's the only thing I can think of. Do you agree with that?
It's plausible.
So what is?
Hey guys, can I butt in?
Sure.
On that point with Rizvi, the question I have is, so I think he owns, and Rod, by the way, really good work over the last few months. I've been following your stuff on this stock. If this goes to zero, does Rizvi stand to lose a lot, or does he somehow own some of the debt as well, where he gets to buy back?
No, he doesn't own the Cohn. He and Cohn invested 30 plus million in February into the common equity. So they'll be out that plus their previous investments in the common equity. So I don't really see where Rizvi comes out ahead from the equity being worthless. Fortress owns the debt. Fortress had partial ownership of the debt as well as the preferred, which with the amended and restated loan, they rolled their preferred stake into the A&R term loan, and effectively, I think they either own 90% of it, or either way, they effectively control the debt.
I see.
Off the record, I mean, I haven't had personal conversations with the guys at Fortress. What I've heard is that the relationship between them and management is soured of late. So I don't know where things go from that vantage point.
Interesting, because the point there's 2 points. The first one is, I mean, if Rizvi has a lot to lose by this going to zero and he owns 30% of it, and when it was at 63, he was probably, I don't know if he was close to being a billionaire or a I don't know what his net worth would have been. He's where we are right now is just, I would think it would be unfathomable for him to even think that we're here. And that leads me to my second point as to why we're here at 67 cents. I think you made a point, Rod, a few months ago about the selling from Builders Union being one reason why we're here. And And when I look at the bid and ask spread on a day-to-day basis, it's actually quite large if you look at the bid-ask spread at various times of the day. So I just don't think there are many sellers here at this level. Any
Yeah, I know a
comments
few
on that?
people whose positions totaled more than 1% that had liquidated their positions heading into the end of the third quarter. They just didn't want it to show up on their own books for the end of the third quarter. But I think you're right here through year end. I'm sure there are some people that have the view similar to that we hold, that there's just an utter disconnect between the value of the assets, and that again, the stumbling point is, will that disconnect be realized? Is management competent enough to do anything other than keep selling the furniture to fund Ben's foibles? I mean,
Well,
it's
go ahead.
no, it's as everyone who bought the stock preceding October is underwater, most deeply so, right? So I think year end, there's plenty of supply of sellers still, of people who just want to be over it. So I wouldn't be surprised if we saw someone decide to take a shot, and file, say, and slowly accumulate into that selling, like seemed to happen when it was chilling at 59, 60 cents
Right.
for a few weeks there. But again, I'm just prognosticating. I have no idea.
I mean, I'm just looking at where the stock price is right now and the market cap and the cash that they have. And I just feel like this should be trading at this should be kind of near where when you created the DD document at 1.7 or something like that. But when I look at other companies that have similar financials, if you look at
there's two words. First one starts with 3 letters. The second one has 4 letters for why the stock is where it is.
I didn't catch you there,
I
Rod.
was making a joke. The reason is Ben.
Okay. But I'm just looking at some other, distressed equities, and you look at their financials to PLBY's financials, and it just doesn't make sense that we're here on a market cap basis. I mean, even given everything, yeah. So I just feel like what is that catalyst? Okay, firing of Ben Cohen. Okay, that's one thing, but why haven't the meme traders or just regular people figured out that there's such a disconnect here? That right now, I feel like you're going to make money if you buy it here at 67 cents, whatever that percentage be.
I actually feel less confident in that than ever before, because of the company's continued willingness to let Ben embark on his pretending to be his CEO. And that's the problem. Is we can all agree that the assets are deeply disconnected, but if Ben's just going to keep burning money, doesn't matter. And I'm unconvinced. Hence why I'm now going to send this letter and see if there's a response from the board or action by the board. I've made it clear, knowing that he and Suhail are both up for re-election and aren't going to enjoy being part of a negative publicity campaign. Perhaps they decide to concoct some sort of a transaction of their own. Who knows? But there's plenty of interested buyers. There's only two people, one person really, who comes down to in terms of approving the sale, I guess. And although there are legal ways to try and get around that if you're working with the creditor directly, and we'll see.
So let me ask you this, Rod. I mean, you've done a lot of work on this, and Suhail has a lot to lose if this goes to zero. Why hasn't he spoken with you? I mean, that to me, that's, if he wants to ever have a chance of reclaiming the fortune that he lost, I don't think he would have anything to lose. I don't think he
cares.
But I mean, is this like such a small part of his net worth that he doesn't care?
Very secretive guy. I have no idea what his net worth is. I don't think he gives a shit.
But to me, that doesn't make any sense, because at one point in time when this was at $60, he was probably worth close to $1 billion, or I don't know, over 500 million at least. And it's
According
basically
to Google, he's still worth more than 500 million.
Okay. Well, I mean, I just don't see why he isn't. I mean, have you reached out to him, and have you received anything from him? I know he has a Twitter account, but like, have you sent him any
The last
letter?
we spoke with management directly, Ben Cohn lied to my boss's face, my chief investment officer, John Kim's face, over lunch in LA in 2022. So we haven't had any communications with Cohn since then. I've never spoken to Rizvi directly. I've spoken to many people who've had multitudes of conversations with Rizvi year to date and preceding that as well. And it does seem like, from my most recent conversations, that he just doesn't give a shit.
That's just surprising to me.
It's
yeah.
But again, there's no real way to force their hand. We our assets under management exceed the market cap by multiples, but that doesn't matter, because if you were to make a move, right, you can't go past 15% of the equity. And you're just really limited in what you can even do, even if you have access to the capital. And someone will own these assets, whether that's us or others, whether it's in or out of bankruptcy. Someone will own them. The brand will live on. But for now, unfortunately, they are committed to selling the furniture, burning, the furniture to keep Ben's hopes and dreams alive, which goes back to the point. Is this all that for them to just keep milking a paycheck? I don't know. Maybe he's in part.
I mean,
sold people
doesn't
on that.
Ben own?
Ben owns a lot
Ben
of
own
common stock that he was handed, that he also inflated by effectuating the Honey Burdett transaction because he was going to be given a percent of shares out as of a certain date. So Ben has done a great job for himself, handing himself a lot of shares by conducting a lot of M&A with this entity. However, those shares could very easily be worthless.
So, but let me put this out there. Why doesn't, if all Ben did was go in and buy 100,000 shares, or even if it's a small token, I think that would show confidence in the business, at least that it's not going to go to zero. I mean, he could do something small like that. I mean, maybe you could kind of send him a message and ask him if he would. I mean, if he thinks...
I've made note of his comments that he made in the fourth quarter 22, as well as I believe first quarter 23, where he noted a disconnect in the price, and yet he's never made an open market purchase of shares. Yeah, sure, he'll retort that he participated and oversubscribed to the rights offering in February. Okay, Ben, you made a comment post that you thought the price was disconnected, and yet you've bought nothing in the open market. I've called him out. I know he's a very thin-skinned narcissist, and he reads the messages he's tagged in on Twitter that I've been tagging him in, calling for his resignation for 15 plus months now. So I know he gets those messages. I've spoken to investors who just got off the phone with him, and we had a discussion about him being upset about, look, Ben, there's no positive outcome with Ben still at the helm. I mean, we put that in the report. Look, there could be a bullish outcome for the creator platform, but we just don't see any, the more positive outcomes. But again, you don't even need a real positive outcome. You just need this to not go into insolvency and some sort of Chapter 11.
Right. Hey, have you reached out to those? There were two other entities that participated in that rights offering. There was this Canadian entity.
We have an ongoing relationship, and we're in contact with one another.
Oh, good. Yeah, listen, I think, you're doing great. Connect that. I think in this range, in my mind, buying the stock here, you're basically getting a call option on one of the world's most known brands, and it's a call option that does not expire.
Rod, I have a quick question. By the way, great points by Satoshi. This I have an idea. Obviously, I don't think it's viable because you probably would have done it by now. But I just want to cover this base. What if you reach out to like a corporate raider like Icon Enterprises and say, look, obviously mismanagement, the board is derelict in their duty. They may not be able to effectuate change.
It's not a matter of capital though. And it's a matter also of how many cycles it's going to take you. You have a board here that has 3 tranches, right? So this is a 5-person board. You have 2 of them up for re-election this coming year. If you wanted to make any major, amendments to the bylaws, you're going to need 2/3 supermajority due to the investor rights agreement, which you have RISV at 30, Cone at, let's call it 4. You really have no way of effectuating the changes you want without RISV playing ball. It doesn't matter how much money you have. It doesn't matter if your name's Icon or Buffett, or it really doesn't matter in this case from the work we've done and the lawyers we've spoken to. And if there's somebody knows of some other backdoor, please let us know.
So essentially, the brand is in a hostage situation, so to speak, where.
That's a good way to put it. RISV is holding it hostage. That's a good way to put it.
Yeah.
Maybe I should call that explicitly out in the letter. Actually, that's a good phraseology.
Frankly, I would.
It can't thrive under his hostage ownership. It cannot.
Absolutely. I think every shareholder would agree with you, other than those 2 gentlemen.
Is there a chance? I mean, what's the short interest right now? Any idea? I think there was like 7 million shares short the other day when I looked at the numbers.
According to, if this wants to work here. Yeah, it was something around that. I don't know why my coefficient just threw up on me. It's not that. I mean, it's not that high. But your point earlier about how illiquid the stock is a very valid one.
Yeah, and I don't think there are that many sellers down here. So I think, if there's...
Yeah, I think you need to get through the holiday selling from everyone who's locking in their losses. It could get interesting for sure in the first quarter, but that's obviously more of a speculation and a trade than an investment thesis.
By the way, I have no stake in the company. I'm not shorting the stock. I do, in the interest of full disclosure, short. But in this case, I'm concerned about squeezes and potential acquisitions, even though you're right, those 2 people will probably block any efforts in that direction. It's still a risk that I'm not willing to take. So I think a lot of traders in my position are also, skittish about shorting at this 67 cents. And by the way, I could short with a really sizable position and drive down the stock at this valuation, but I'm not.
Well, somebody just said that there was like a limitless call option. I don't think that's the case. This company has been losing money every quarter, and they don't have that much more runway to go if they continue losing money. So it's not like this indefinite call option that all of a sudden they're going to turn it around 2 years from now or anything.
Yeah, they'll have going concern language by, I think at latest the second quarter of next year if there's no change in the status quo.
What are the analysts saying? Does anybody have an idea? I mean, are there analysts covering this? I'm guessing there were 2 questions on the call, so there's at least 2 analysts covering this. And what's their price target?
You have 4 analysts covering it, but when you look at the caliber of the analysts that are covering it, you've got Roth, Canaccord, Chardin, and Jeffries are the remaining analysts. And from a price target perspective, they're ranging from $1.90 on the low end to $5 on the high end. We'll see what those change to overnight.
So, Rod, what's your plan now? I mean, how are you? I mean, assuming you're going to keep your position, what other than reaching out and sending this letter? Is there any? Are you trying to reach out to Rizvi again? Are you?
Well, look, like I hope I made clear, I'm an employee of the firm, and I have my own personal stake. The firm has its stake, which I don't. That's not part of my beneficial ownership interest, and neither myself nor the firm have created any sort of group with other investors. But what I will say is that if you sum the total of the share ownership of the various investors we've spoken with, it becomes a very large number. And while, again, the hurdle is very high because of how that investor rights agreement is structured, it's going to at least be uncomfortable for them over the next few months, I think, if they completely shrug off the proposal, which is to put it all up for sale, sell it. Because I think that's the least destructive outcome for shareholders. Unfortunately, I think shareholders will be impaired further if Ben is allowed to continue burning capital on whatever it is that he wrote in this newest version of his dream that he's had for years now. That wasn't even his idea. Having spoken to folks at Playboy, former employees at Playboy, you should just understand how narcissistic and egotistical this man is. It's sickening, frankly. So look, I mean, I personally own my shares in a Roth IRA, so I have no benefit in selling for a tax loss. But I could wholly understand why people would want to lock in the loss, and as you noted, potentially think of it as a somewhat asymmetric bet, because that is, I still think, how it's shaped. But as I noted, I'm less confident than ever that they'll do the right thing. They had said, Suhail and Ben had spoken to multiple investors who had conversations with them earlier this year, that Honey Burdett would be sold. And they've changed their tune on that. And are now saying, we don't think it's the right time to maximize shareholder value to sell that, is Ben's quote from Q&A today. So, they've harmed relationships that they may have had with shareholders, other shareholders. It's not a matter of capital. Again, going back to it's a matter of, you have, as Mr. McMoney, I think, put it, Rizvi holding the thing hostage. It's his ball, and if he can't play with it, he'll pop it. I mean, that's effectively what we're sitting at.
But he's not going to let it go to zero. I feel pretty confident.
I've said that for a long time now, and I don't know that I believe it anymore.
Well, I mean, if you know that he doesn't own the debt, he has something to lose if this goes to zero. And that's why I think this is an asymmetric risk reward right here.
Well, coming up 7 minutes to the top of the hour, so we'll be wrapping it up soon here. I saw a couple other people. Quint, Dev had come up. I don't know if you wanted to chime in. Mr. DCC, I saw obviously you came up and you had chimed in. I don't know if you had anything else you wanted to add.
Yeah.
Hey,
can you hear me?
Yeah.
Yeah, sorry. I just wanted to switch a little bit the conversation from like what could be Ben and Rizvi's motivation from that to like the remark about like the IP and the potential sale of the Chinese business IP. Would you consider that like a good thing or a bad thing? Because on one hand, it would probably reduce the debt quite substantially, but it would probably give more capital for Ben to play with his Playboy club, right, and open more stores. And so, like, I don't know if I see that as a positive development or not.
And the price always matters. One of the things that had gotten me to underwrite the investment initially was the notion that they had these long-term contractual cash flow streams, and clearly,
Yeah,
that was
that
a
would
poor
definitely impact
underwriting
the.
decision on my part. Because clearly, whatever has happened, and the part that stuns me is that Cohn himself oversaw the purported negotiation of these, renegotiation of some of these contracts before COVID in 2019. So again, it all comes back to the same guy being involved. So it's like I hear what you're saying, because I agree. If he is just handed more money, well, that's not getting back to shareholders. So that's why I think it really needs to be he needs to go, and there needs to be a managed process to return capital to shareholders. There's just no alternative at this point.
No.
And the other thing too is it's just very convoluted. You have over $300 million in 300, I guess at this point, net of lovers, like 20 million in net operating losses from the years of magazine losses and losses from these various M&A deals that Ben has wasted shareholder capital on. So to conduct a transaction in a way that you maximize the value of those NOLs, there's just a lot of moving parts here. And yeah, it just was very disappointing to hear them say they're not going to sell Honey Birdette, in full. And now are they going to get somebody's going to bring cash in and get a big equity stake in Honey Birdette? I don't know how much you're going to get for it, even in this landscape. It's still a very Australian-centric retailer of luxury lingerie, to making up a word there. So yeah, I mean, if they sold to China, if they sold everything in China, I think on net it would be good for them to be completely separated from that if they can get a good price. But I mean, I'm talking, they claimed that the JV was 250 million, right?
The only positive development from that, I guess, would be that it's a less complicated business for a potential acquirer to come in.
Right, that's true. Yeah, it makes it more attractive for sure. I think if you slice off China, it makes it more attractive.
The other question I had was, why hasn't this caught on with the meme crowd yet? It just has all the, I would say, the attributes of something that could have caught on. And I'm just surprised that has not happened. Fundamentals aside.
I mean, if anyone knew what made a meme, I really don't know the answer to that, because it does seem that no one really cares about it. We put the report out because we thought it was misunderstood, and yeah, nothing really changed.
By the way, Rod, I downloaded.
Did you publish it on Reddit, and I guess it was on Twitter? But did you on Wall Street Bets? I guess they don't allow stock discussions for those under 500 million, right?
Well, I mean, like, that kind of market is also not really here right now anyways. It's not 2021 anymore, so I don't think, that's just so easy to do anyways. But like a lot of the things that they're doing, if you did look at any of the fundamentals, they're just kind of like cringy. Like there was the airplane that was kind of weird. All their attempts at doing anything digital have been kind of weird. If anything, the rise to 63 was definitely like over enthusiasm, right? So that happened it really peaked right at the NFT release, right around NFT time. So it's just the market. I mean, I wouldn't blame it on the market. It's certainly, but it's like I don't. That's not gonna. It's not gonna
You
come
you
back.
can't have a meme that was already something of a meme under the existing CEO who's overseeing just complete decimation.
Yeah.
So I don't think that anyone's going to be drawn in unless there were a change.
Yeah. Like the history's not gonna.
Sorry, McMoney, you were saying you downloaded
Oh, yeah, I
it?
was just mentioning that I downloaded your 17-page PDF, the research report from July 2023. I encourage everyone here to do the same. You just click on the link. It's a one click. And I'm definitely going to take a long, hard look at it. In fact, I encourage you to email a link to this recording to the management team. They may listen to it, actually.
Any predictions for where the stock price goes over the next week or so? Do you think we see new lows under 58 cents, or do you think we're going to go over 80 cents?
I've given up prognosticating on the stock price, but thank you for the sentiments, McMoney. I mean, I need to work on exactly what I want to say, but I do anticipate on behalf of the firm sending a letter in short order here to them.
Yes, and I would frankly, if it's just me, I mean, it's up to you. I would use very strong language. I would use the word hostage. I would put a link to this recording. I mean, you conducted this space very well, laid out all the points, and it's really hard to dispute any of it. I think all the contributors, Satoshi, everyone, Mr. DCC, everyone brought up great points. And unfortunately, I've seen in business many cases in which stubborn management refused to budge. Even clearly, it was a Titanic sinking ship, but it could have been turned around in some way, shape, or form. And so I wouldn't preclude the possibility of this going to zero, frankly, or Chapter 11 bankruptcy if this course continues. It's a very dire situation. So any steps that you take is warranted, and it's the responsible thing to do. In fact, if you were running the company, obviously things would be completely better. No question about it. But unfortunately, that's not the case.
Unfortunately not. But thank you for that. And look, some people didn't like the report, and broadly we got pretty good feedback on the report. I mean, our intention was to bring light to what we thought was misunderstood. I think it broadly is, it is misunderstood, but there's also a very valid reason why it trades and is priced the way it does, and that reason doesn't look like it's changing imminently. And frankly, I think if there's no change, that it is most likely this ends up in a Chapter 11 restructuring. So, yeah, it's rough out there for PLBY, but we'll see what happens. I'm gonna wind it down though. I've been battling a cold, and I've been obviously talking a lot, so my scratchy throat's coming back.
Thanks, Rod.
Yeah, we'll be back. We will do Friday, tomorrow. We will do our Wook in review, our weekly at the close on Friday's broadcast. So if anyone wants to join, please follow the @Wook Capital handle, and you can follow my personal handle @Rod Alsman if you'd like. Give Joe's @Toast handle a follow. But yeah, every Friday at the close, we host these weekly broadcasts, and yeah, we'll hopefully catch some of you tomorrow. So thanks for tuning in to our third quarter 23 PLBY Group earnings call, and this won't be the last management hears from us. Cheers, everyone. Have a good night.